Hello and welcome to the Friday wrap up here on my channel and the Goxstein Network's channels. Today is June 26th, 2026, and I hope that everyone can hear me out there. I was having some microphone trouble back here just a moment ago, but this is brought to you by David Goxstein. I'm your host, Landy. This is the Friday wrap up. This is live, so I am watching the chat. What's up? What's up, OTG? I see Ivan, Ash, and a couple of others here. It's great to see everybody. Look, we're going to talk about some Bitcoin today. I'm going to take a look at obviously some of the higher term time frame stuff, what to expect as we head into the weekend, or not what to expect, but what to look for as we head into the weekend. And of course, the last week of the month, quarterly, and 6 months. So there is some important stuff going on here. Bitcoin did hit the $58,000 low side here on the wick down earlier this week and has been kind of hanging out right around $58,000 to $60,000. So we're going to talk a little bit about that. We're going to talk a little bit about the etchings of expansion here and what this means. Um, what the criteria are going to be to look for, at least for a potential expansion down and or a reversal off of this area, and the areas to pay attention to from not just the daily time frame but the weekly time frame, because right where the lower second standard deviation is that would kick off expansion if closed below is right around that same area for both the daily and the weekly. And if you are in the chat there, if you can let me know if you can hear me okay, that would be great. Um, it's a little bit tougher going through this setup than my normal setup. So I'm not actually at my normal setup. So you'll have to let me know if you can hear me okay. If the sound is coming through, I might even actually jump onto the stream here myself just so I can hear it. So forgive me for a second here while I actually go and look as well. Let's see. Yes, I'm live. There should be a delay. Okay. So it does seem as though it sounds okay on my end. So it should to you as well. All right, let's jump right into it. Look, Bitcoin just pushed up against the lower second standard deviation. What were the targets that I was looking for? 58 to $60,000 to the downside. That is the area that Bitcoin can hang out in. That is the original downside structure that I've been looking for. Thank you, Shiv. And what's up, Finn? It's the original downside structure that I was looking for after we broke down from essentially $80,000, right? We were looking 58 to 60. We got 60 on the initial bounce here for spot. We got a retest up into the monthly structure overhead. That nice bearish retest of the higher low right there with the wick to 82.8. So that zone was around 82.5 to $83,000. And now we've fulfilled the downside target right around 58 to 60. But what's very important to understand here is that if we do drop this structure um, on the daily and the weekly, so closes on the daily need to be followed through with a weekly close. At minimum, I'd be looking, mid 50s or something like that. But realistically, it's we're looking down to anywhere from 45 to 48 to $50,000. So 48 to 50, right around the prior bear market lower high. And of course, David's going to be here trolling me. What's up, David? Of course, we had the prior to the ETF launch, we had the $49,000 run of that lower high from the bear market start from 22. We also found a higher low right there. So really important to kind of point that out is that there is, daily areas of interest, weekly areas of interest, but realistically, the more macro structures are going to be more important. So, 48 to $50,000 or so, and then 45 and a half, if that started to break down, would be the next logical area to look. Um, but that's really only going to occur on closes below, 58, 60, kind of looking shaky, but still in an area where things can recover and try for further upside. but not looking great at the moment on the daily. But it is in bounce territory. This is a big, big level, big, big area. And one of the things that you do need to understand about the way that I look at charts and the way that I utilize Bollinger Bands for volatility metrics, along with support and resistance. So it's trend, um, support and resistance, volatility, and of course, momentum. The first three create the fourth. So you've got your trend that defines your support and resistance zones of areas at the swings and the closes and the pivots and trend. And then you have the volatility, the dispersion of returns, and those three create momentum in one direction or the other. And we often find that when we are in a compression or a ranged compression, like what we are seeing here on the monthly time frame for Bitcoin, first pass tests of expansion usually lead to a nice bounce. Not always, though. It doesn't always have to occur that way. This is shaping up to be a lower high as it stands right now. Granted, there is still time left to go in the month, the quarterly and the 6 month, of course. But big thing here is if we do start to see closes in lower term timeframes like the weeklies and the dailies that line up with this monthly. So we have three confluences right in the same area. Lower second on the monthly, lower second on the weekly, and then, of course, if we go down here to the daily, essentially um, just right around the lower second standard deviation. Got to close open under there, but not consistent closes under to initiate that expansion. And realistically, the way to initiate expansion now, we'd have to drop the actual lows here at 58 to get expansion down. And I wouldn't be surprised if if we actually saw like a quick swing down into the mid 50s, if we do see a break of 58, so mid to upper 50s, and then try to bounce back in, and we could see running from one side of the bands to the other. So for those that know Bollinger Band setup, John Bollinger, has kind of defined it as typically the second standard deviation away from the mean to the upside and downside typically are reversal zones. Now, I use a triple set, and there's criteria that needs to be met. So if we are going to initiate expansion, which we have started to initiate expansion, we need to see additional closes below the prior low, right? And then continuation below the lows, of course, to initiate expansion down, but closes below the prior low here, which was right around 59, 111 here, 110. And that's going to be the criteria to see continued expansion to the downside. That would put Bitcoin below the lower second. And then we see the continuation candle over candle down there. If you see it in lower term timeframes relative to the daily, then we're likely swinging down. If we don't get it closed, then we will come back in. So the so I would be aware of a reversal, especially on a major support. And what would that criteria look like? And why is it so important that I'm stressing this point? Because it's a daily, it's a weekly, and it's a monthly. So if we see dailies under there, and then we see weeklies close under there, and we see the monthly close under there, we're initiating expansion on the lower term timeframes that can start to initiate further downside targets on expansion for something like the monthly time frame. So let's just go back to the monthly real quick, and I'll describe what I'd be looking for. If we did that this month, just speculation. If we did that this month, we close below 58, we're starting to get into the mid 50s, maybe even bounce, but we close below the lower second, right? We close below the close open structure here, which is right where we are essentially bouncing from on the monthly, right around the $59,000 region, right? If we start closing below there, then we look to the current monthly lower third standard deviation, which is currently at $42,000 and headed down. So this would be the area of interest when it updates next month from the macro timeframe perspective. And then the verification of keeping that target alive would be continuation on the daily and the weekly, meeting the conditions for further downside. Now, something to be aware of with the monthly, of course, is if it closes anything like this, especially down here below 60K. And in fact, actually, let's get an actual number for that. Anywhere below last month's low is at 72,400. Main area overhead, by the way, that we're going to look at in a second here for the daily. I would be looking at, yep, this is not just a trend break, but now we have a trend reversal set up and looking for continuation at minimum to fill out this wick low, which is essentially you're looking 48 to 50K on the low side. So, and maybe even going for 45 and a half. And then we can start entertaining moves down. By the way, this is where it pivoted right around this high with the expansive look as we start to pull away from the basis band here and initiate slight downside expansion, but it is not confirmed. And be careful, these can become reversal areas. So, um, Trade Decision Lab says I use Bollinger Bands all the time and the TDI indicator. Awesome, that's great. Well, I welcome anyone who likes to measure volatility because it's the one key piece that a lot of people leave out of their analysis. Um, and can often define, when we are going to be loading up for much larger moves. But at the start of a move, if we don't see the criteria of, the breakdown below the low on and continuation of expansion, beware that this could bounce the other way. All right, let's go ahead and actually turn on my mess of lines, my squiggly lines, my crayon drawing chart. And this is a mess, and you're going to love this mess. Everybody loves a good mess on the charts. As you can see, I'd like to use the purple every once in a while for daily areas of interest. The purple crayons are grape. All right, so we're right in the zone between, I've been talking about 58 to 60. We hit 58 directly. Great. The primary zone of interest down here is more around the upper 58 region, 58.8 to $60,000 or 60,200 here on index. Here's what I would need to see. I need to see Bitcoin for the bulls. You need to see closes back above 60K. Set the low. Now to set the low technically on the daily, which of course is, this is a higher low, lower high trend reversal set up to lower low. But to set this lower low, we'd need to see minimum closes above 60,690. I would prefer to see closes above 61, the candle body here. Which is where the the lower first standard deviation away from the basis bands is here, and then a recovery above 62 and a half. That gives the bulls a chance to go and test this last lower high, right? A very important zone between 62 and a half and $65,000 by the upper first standard deviation. Anywhere above $65,000 on the high side of this range, rather, we can potentially see a break of the downtrend. That's what I'd want to see. Lower term time frames, watching that 4 hour, right? You can start to see that this could become a play off of the low side structure here, as Bits likes to say, there's been no real acceptance below. Now we have gotten closes below $60,000, but we're still seeing, price remain inside of this wick over here, right? We had the weaker bounce off of the low side structure, this zone to begin with. Now we're just wicking through in lower term time frames. But $60,000 is where things could start to look like they at least want to come up and test. 60,500, or it's actually 60,690. So again, it's above 61K. Bearish, still a bearish outlook on the 4 hour right now, but at least you could look for 62 to 62 and a half on the low end. And then any kind of reclaim above there, just beware of swings around the $63,000 area that fall right back through. Might give some opportunities here around that area there. So essentially what I'd be looking for is, something similar to, coming up and doing, one of these and then trying up for that, or we see it, try up all the way, and basically get mean reversion all the way back up and test the top side, go back into a compression, then fall through the lows is actually what I think would happen if I don't actually foresee that going, but this could be a play, something like that. But essentially we need to see the lows hold, and you need to see it hold on daily closes. Daily's following through to the weekly. We're starting to look mid to low 50s, big weeklies around Essentially, you got 55 to 56 here, down to 52 and a half to 53 and a half. You can split the difference, probably top side. You can just call it 55. You can go 54 to 56 as the top side of that zone. Anywhere below there, we start looking towards that monthly area, 48 to 50 down here. I will pull some weeklies in play if I see this starting to get tagged and filled out in this zone here. But other than that, it's all about decision time here, either bounce or head down for the liquidity. And on dailies and weeklies, beware of a sweep of liquidity down below, like into a lower third standard deviation away from the basis that don't actually follow through. So like sweep down into this area and grab the liquidity and then start closing back inside of these wicks and the lower second standard deviation. But if it does close below the lows over here, especially the most recent lows, not only are we going for a wick fill, we're going for liquidity. And if it closes below, we're probably looking for more expansion down. On the other side of that, though, if this can recover because we have initiated expansion into a very important area, lower second standard deviation on the daily, weekly, and monthly. If it does bounce hard, recovers above 65, we can start looking back to the daily area around 68. You can see now that the longer that Bitcoin kind of hangs out on the lows here, if it does bounce back up, we're going to see follow through with that expansion to encompass 68. And realistically, you're probably looking for 68 to 70, not just this daily zone between 68 to 69K, but probably 68 to 70. And that gives you the potential for the $72,000 area, which might want to remind you of is that criteria right here for the prior month low is right above there. So that is viable. It's a matter of, do we hold this or do we come down for liquidity in the mid 50s and then try again later? Or do we hold this area and then try to recover? The etchings of it, to keep it very simple, I'm going to be watching 62 and a half. That's when things get interesting, as it does open the zone up between 62 and a half and 65. And you want to see close above 65. And then we probably have a good chance for running 68 to 70 and potentially more to 72 and maybe even 74. I'm going to tell you right now, though, this monthly looks like absolute trash. This looks like continuation, but because it's right up against a major macro area of interest and because it is a lower second standard deviation, beware of a reversal off of it. That's really it for Bitcoin. I don't really have too much more to say. Bit says send it to 72. Audio is good. Thank you. Um, Send it higher, leave people sidelined for lower. Yeah, well, I would like to see that because we had such a weak bounce on this daily. I need to see. It's got to start with the 4 hour, man. The 4 hour will give it a chance above 61 or so. That would be the etchings of a possible chance from here. Um, I'm not a fan of low liquidity weekends. We'll see what the market desires this weekend. If you're looking for closes this weekend, you're looking for closes essentially to remain within the low here, for me, and that's going to be your 59,100, preferably above 60 in that zone. Um, yeah, lower first is 64, 640, 640, 650 area. This is going to be coming down. We're going to see the lower second get expansion down into, 56, 57 on this next area. We've got 52 on the bottom side down here. And if I turn my mess of support and resistance on here, we can see that the lower third standard deviation is already showing that if we break below, as a zone, typically turns into a wick. But as a zone, 52 and a half to 56 is absolutely viable if we start dropping the low on daily closes. That's really what it is. Below 58. We've been looking for this for a while, 58 to 60. So lower term time frame bounces are to be expected, but anywhere below 60 to 61, it's probably going to keep loading up for either for a move lower, in my opinion. Grab that liquidity to the downside and then try for a bounce back up. But If we don't see that, up is the way to go to grab the liquidity. We've been seeing orders stacking in that area. So can you imagine what we'll be thinking about? Can you imagine what we'll be thinking about our buy-in prices from tomorrow to 8 years from now? Look, I've said this pretty consistently across various spaces events, whether it's Wolf Bitcoin, ATC, the two primary spaces that I attend on a regular basis. I've said this on David's show, The Breakdown. I've said this here. 60K and under is all accumulation. It's all discount. Like there's no, this is when you want to be here, is here and lower, right? And if it doesn't go lower, it's going to form a base here to give you an opportunity to evaluate price and then pick the higher low then, right? Like that's really what you'd be looking for. So, and I'm not this is not a bottoming structure. Not yet. You don't know a bottoming structure until you see the subsequent candles, right? So, and I'm not in the game to make predictions. I'm in the game to give you the areas of interest uh bits. If it doesn't go lower, it can go upper. Look, to channel my my inner nat, right? Um if a move fails to go lower, it's gonna go higher. If a move fails to go higher, it's gonna go lower. It's very, very simple. I mean, like, it sounds silly, to say for some people, right? But it's true. Like, if we're getting good support here, the next move is to grab liquidity from the top side. And quite honestly, let's switch the tabs here and let me refresh the screen, not a screen, it's a screen. Um Let's go ahead and take a look at open interest dropping off the map here on the hourly as we came into the weekend here. Let's go ahead and this is just Coinalyze. So let me get this up here. Um, OI went from 21.4 billion and is now sitting at 20 billion, right? So got a lot of players taking taking positions and closing them. Obviously, there's a lot of people getting whipsawed around here in this area as well. Obviously, the bigger move to 68 took out a bunch of longs off of the structure here that were like, no, macro low set at 59, then it goes to 58. But macro low was supposed to be 60, guys. I thought, wait, oh, that's right. That's why we defined a zone 58 to 60. And no one that is an analyst that I know is sitting here going, this is the macro low. It is definitely a massive area of interest, though. And, what are we looking at for long short ratio in the market here? Yeah, we're below 2. Um, it's still the market's predominantly long pay short anyway. We are seeing kind of a fluctuation um, of funding rates here on the lows as the liquidation event occurred. Obviously, those longs get closed, so you get that flip into negative funding for a little bit, and then we do see longs bidding this area, and we have seen a lot of spot bids in this area. Volume has been pretty high. If you look at the local area, not from the daily perspective, but in certain pockets here, if you look at, if you just throw on regular old volume, if you just look here, you can see that pretty, pretty nice volume spikes in these areas, right? And, you know, it's a matter of finding that volume back to the upside. If we do start getting above 61, 62 and a half to 65, I think we could find some good late shorts getting pushed out. Um, Longs covering, right? And then see how things turn out if it does hold this area. But otherwise, it's go down and grab all the freaking stacked orders in the mid 50s. We'll see though. We'll see. Maybe there's shenanigans in store. Um, I should use Leviathan liquidation levels on the 30-second chart. Man. Um, yeah, no, I'm good. Let's go ahead and And yeah, so the higher volume, right? Last time we came down, we swept. Um, so you've got 60K or 59K over here. We saw some good volume come in, but not even comparable, right? So the criteria is very clear. We start breaking below 58, we're going for the mid 50s. If it's just a swing into it, great. Pick up those orders. Need to see closes back above 60, head towards 62 and a half, 65. It's pretty simple, actually. Etchings of expansion coming into a weekend. What you want to see if you're bullish is you just want to see this area hold through the weekend. And be careful when we get futures open on Sunday. All right, let's go ahead and take a look at oil. So oil going in for the gap fill here, nearly filled. It did hit on the downside here, 68.56, nearly fully filling this gap. And this is a massive, massive area of interest. This does look like it could bounce, but realistically, nothing below $78 is going to matter too much. But if we do see it start to bottom in and around here, beware that oil heads up, because if oil heads up and Dixie hangs on the highs here, um, and goes for more higher low structure, and oil heads up at the same time, beware of 102 because 103 is in the cards, in my opinion. It's getting expansion into a major area between 101 and 102. Looking at the weekly, yeah, anywhere above here, it could chop its way up to 103. But, you know, this is a major area of interest as resistance. So I would keep an eye if we start to see the oil and Dixie correlate again, because right now they are uncorrelated at the moment. So, and then consider some of what you're probably hearing out of the Middle East right now. So we shall see. Let's take a look at SPY. This is something that I talked about, right? We now have a lower high close on the weekly. This could turn out to be a bull flag setup, but realistically, it's fairly clear, right? Drop 720. What were we looking for? 715. We almost got it on the daily here. Almost got our 715. It came in as a front run at 716, but needs to drop it on a close. That's where we start looking not just at 715 here, and running the close here, but running the swing to the top side structure at 715. That's going to open this whole candle structure up over here down to 700, and potentially in for a retest of the highs here, 695 to 700, and maybe even more. But I'm not fully convinced that is what we're going to see play out directly from here. One of the things that I've talked about is we're either going to get the correction now, and then we gauge it later, right? Now, grant this is a nice correction so far, but I mean a wider correction. So far, this is a 5.75 or 0.76 correction. But to get like that 10, 12, 15% correction down into some of the key structures down there, like a 10% would be right back to the highs here, 780, 785. In this case, I'm sorry, 680 to 685 or so. Great. We could potentially see that, but often we typically see a squeeze at the highs. So just beware, if 720 to 715 at this current low on SPY holds up, that this could work its way back up over time and then start getting a compression. So, it is the summertime. The lower term time frame correction daily into weekly is not unexpected. And I believe I talked about this kind of a structure, looking kind of like the structure that we see over here. And then we go into a compression and then we get the real correction later, right? That is something that I'm still eyeing. Daily, Still downside pressure. Weekly, oof, yeah. You need to see close above 753 for next week. That's going to update though. We're probably looking more like 745 to 750 um, coming into next week. And for SPY, it's pretty clear. Got to take out that lower high in the daily for this move down. We got the chop down in terms of structure, trend break, lower high, lower low, higher low close as it relates to the last lower low. So just note that this is, um, although it can test the low side, if it doesn't break below the wick low on a close, you know, this is likely going to go back into compression. Then it's all about watching 755 to the highs essentially at 760 for continuation up to 765 or slightly new highs as this starts to form a range. If it doesn't break out above there and start to get expansion up to 770, 780 region, we could be looking at something like this, a load up into another larger correction later, which, I'm not opposed to. And Dow is continuing to make new highs. That's a big old rejection, though. For Dow, be aware of the swing low next week. So structure breaks on Dow, likely end of rotation, and further risk off rotation. But we shall see. So in this case, below 51,301, and what we've seen is an internal rotation within markets, right? So but today we did see some strength come back to the Mag 7 and some semis, in terms of the bidding aggressiveness. So we'll see if that holds up. But if we start to see downside further in SPY and we start to see Dow go with it and get pulled down with it, then look for a possible structure break. But I do favor more of a compression around the high side structure here, which has some room to move for SPY. So this has some room. It can move around. It can bounce around. It can wick in and out of it. Close below 720, likely initiate. Close above 755. We're going back for the highs and probably higher. Doesn't mean we're going to get continuation on expansion, but beware of a grind that starts to load the cannons for a larger correction down. That's all. Not too much else to say about really any of this. It's going kind of how we've expected and talked about over the course of many, many, many weeks and months now. Um, I am not convinced that this area isn't just going to go for the mid 50s. I'll be honest with you, Bits. I know that you have some higher before lower targets, but we'll see. I mean, it's really all about the conditions, and now we're loading up into an hourly range that's really going to define it, right? Above, essentially 61K to give it room above this low and this last rejected high. And Bitcoin's been playing pretty clean. So this would look, yeah, I'd want to see it above. You could even take it above. I'd almost for like lower term time frames. I'd want to see it above this area here. Start to run 62 to 62 and a half and test that overhead resistance, right? That's all going to start on even getting back above and holding 60. And then we can start entertaining trips up to test this consolidation before the breakdown. We'll see. Let me go ahead and read the chat here for a moment. 52 to 55, then she rocks new all-time high. Yeah, no, I don't think so. Yeah, I don't think so. 30K. If 30K Bitcoin is the measurement from last peak till now in the mid 50s, 80% retrace. So this may be the bottom, taking that into account. I'm not sure I'm reading that right, to be honest. Ash says order book is pretty stacked down to 50K. If you're looking at 30K, you're looking at probably, I think 30K is a bit aggressive, but that would be in line with like prior cycle corrections or somewhere around the percentage drawdown. I don't know if we see that, to be quite honest. Take it level by level. I if you were gonna put me on the spot, I would say if you were gonna put me on the spot for like where does the macro low likely come in, um, I would say it's either the monthly to the 48 to 50 monthly. If you're gonna put me on the spot, the 45 to 48, 48 to 50. Depends on how long or how quickly it would take to get there. Or we're looking 38.5 to the weeklies and the close open right here around the $42,000 region, which is going to be right around that lower third standard deviation. So if you were to ask me to just like, hey, right now, where would I put this um, for a call and like put me on the spot? I would say that we're probably looking at 38.5 to 42 or so, which there's weeklies and of course the monthly close open there. You've got 38.5. That was the post ETF low, which was the monthly to the buy side order blocks that came in around 48 to 50 and lower third standard deviation. I wouldn't be looking for too much more than that. Um, but there's always the chance that it could go lower, right? I know some people have 35. Um, they look at this as, we're right here on this high, go to the next high, go to the low, work the other low, right? So you have a lot of folks that are looking at this, right? Um, but again, I've said this before. We're at a compression. We're coming from a compression of possible expansion. If you want to see 58 to 60 as a macro low, which you can look over here and you can see that we're swinging right around this high and this low. This would be uncharacteristic and not my first take on what Bitcoin is doing, but I've mentioned since the highs, you may remember, if you've been watching long enough, of a potential um, and something to be very aware of was a deviation of trend. In this case, this would be more than a deviation. This would be a break of trend, because a deviation would just go right back up, right? You deviate and then you V recover, and that's very rare. Um, but you then set up the trend reversal, right? And then you kind of go sideways and maybe you dip in, but then you come back out the other side, and then this area becomes the macro low. That's only because of the compression that we see at the highs here. But if we do resolve expansion to the downside, you have to follow the areas of interest, right? You're breaking below the high side, not just swings, but closes over here. You got to look to the next area. And this was the rejection here. There is obviously we saw a higher low come in here right on the first high put in from 2021 on the close, but you have to look to 45 to 48. You have to look to 38.5 to some of the weeklies in between, right before it, and then you look to the next area, right? And the next real area, and most are going to tell me I'm crazy for even looking at 38.5 to the 42.5, but I'm telling you that lower third standard deviation, very important. And yes, it would move down to 38.5 on the next close. And in fact, the end of this month, it likely does move down to 38.5. So the next big area to pay attention to is you're looking at 28 to 35. And there's a lot of people looking there, and percentage drawdown from there, from the highs, you're looking at, 74, 77. If we're doing the same thing, you're looking at 28 to $30,000. I don't buy that we're going to be doing the same thing. Look, we had a lot of things that happened since the lows of 2022. And I'll walk through just a few, because a lot of people haven't probably heard my thoughts. There's also a lot of new people that have started watching me recently, and maybe not are not familiar. But when you look here, this was a very structured move up. You had, of course, the you had the actual higher low, you had the higher high, a drawdown into higher low, higher high, higher low, higher high, and now we're breaking and working our way back down. So yes, absolutely, you see that this area is what everybody's looking, but you have to pay attention to these low side structures. And if we were to take a look here off of the 18 lows to the highs here, and then of course you do the drawdown, of course, of 77%. Everybody is looking for the same type of move, right? So you had a 2,108% move off of the lows from 18 to 2021. We had a 715% move off of the lows from 22. And then, many are going to be looking down around that area for like a 75% move to get to like 30K. Well, that's not out of the question. The setups are very different in terms of volatility. It could potentially be much worse when you're looking at a compression coming off of a high side structure because we actually reclaimed the prior cycle highs, which was new, right? So structure changed in 22 on the bear market lows. We had never previously reclaimed a prior high, and we did so. And not only did we do so, we sat on top of it, we wicked it, and then we closed inside of it for the low. Of course, many were looking at this high over here at 14, 1380 to 14K, and then of course looking at 10 to 12K and stuff like that. This area here between this high around 12 to the $10,000 close, but I would just caution that these can be reversal points and you need to look at the extremes. Lower third standard deviation was not in play last cycle, right? Lower third standard deviation was all the way down here as we were coming up into the compression. Lower third standard deviation was like $8,000. And then started to head back down when we, for the first time in Bitcoin's history, hit a lower second standard deviation or two standard deviations away from a mean, in this case, the 20 simple. Now we have, off of the bear market low, we went into a compression. I remember talking a lot about this, that we'll get the initial expansion. And if we mean revert, we'll be capped by that upper second, upper third zone, which is one of the reasons why I was calling for 123 to 125 to actually be a major high. And I was willing to call it the macro high when I saw a break of trend, primarily because we are in a compression at the highs and we need to be aware of potential reversals off the lower second. And, that is where I stand on this stuff, right? And the longer it takes to break down and actually hit some sort of an impulsive move down through a major institutional zone. I mean, the major institutional zone is literally this area here. So like Nat said something like 35K, I think. You had a 91% move, right? The major institutional zone is 38.5 to the 70 the 72,835 up here or whatever. This entire zone is a major institutional zone, right? So this is the most important zone for me to be paying attention to, and I'm just going to take it in order, right? We hit 58 to 60, and if you look at where the bulk of the ordering was, it was above. It was essentially 48 to 50, and then into the low 70s, right? But it spent most of its time right around this area, right? Right around where we are trading right now. So this area is very important. 48 to 50, 58 to 60, and you can take and split the difference in the mid 50s. If we were to drop 38 and a half, we're probably very quickly going to 35, and maybe then we can open up targets to that 30, right? I have no problem adjusting on the fly to those things. As I've been saying for a while, take it level by level until we see the actual expansion. Um, and it's value here and lower anyway. So send it there. I don't care. Let's just get some more Bitcoin. It's like, I don't give a shit. Like, and the people that are crying are the ones that set expectations of really obscene prices, right? Those are the people that are having the most trouble with reasoning what's going on with Bitcoin. Is cycles don't matter, miners don't matter, nothing matters. It's all about institutions. Meanwhile, more than half of the Bitcoin held supply, and we're not talking lost supplies held by OGs. You've got miner wallets hold more than all of the spot ETFs combined in 1.8 million coins. You've got crypto native exchanges that regularly have about 2.7 million Bitcoin on them. Like, but no, it's all the things you can't see, man. It's the institutions, it's the OTC desks. No one knows where anything's going ever. It's like, yeah, shut up. The people who talk like that in absolutes really have no damn clue what they're talking about. They like to make up a narrative, and apparently my stream looks like shit. Is that what I'm seeing? Sorry about that, folks. Yeah, I think unless anybody's got order book pretty stacked. Yeah, the last thing that he said was last thing I saw here was order book's pretty stacked down to 50K. 50K, not 30K. Yeah. So yeah, Snowman. There's the methodology is conditions need to be met, right? To see the downside, and it has to be met on closes. Um, so it's really, really obvious now. Closes below $58,000 on the daily that follow through to the weekly. We've probably already seen mid 50s by then. Follow through to the weekly, we start targeting, upper 40s to 50K, 48 to 50. And then potentially more opens up on the table. I would say the inflection point would be if we start seeing it fall below 48. Got to pay very close attention to 45K, to that area at 42. So, yeah, I think that might actually do it. I've been talking for a while here. There's not too much else chatting going on. So, unless anybody has any questions or wants me to look at something um, specific or kind of give you my thoughts on something specific, I might just start wrapping it up. But if you do, I'm gonna let this kind of go out there. So if you do have any questions, go ahead and put them in the chat there. If you want me to look at anything specific, if you vehemently disagree and you think that I'm an asshole and I don't know what I'm talking about, then you can also put that in the chat. I don't mind. But other than that, while I wait for the delay, um, there's a lot of fear in markets, but not enough. I said this to David earlier. This is like the kiddie pool of fear in these markets. We are nowhere near as fearful. There's not like institution after institution blowing up like left and right like it was even last bear market. So it's either gonna become something like that, um, which even if we were to dive down for lower prices on a next leg, which is what I'm in favor of, um, I still don't think we're going to see that kind of fear, and I don't think the institutions are going to be going anywhere. They'll just find the opportunity to buy discount so that they can sell premium later on. And this is when you want to be in markets. Don't go away. Yeah, sell in May and go away. Oh, okay. You're gonna sell and then walk away when you're gonna get really good prices. You're gonna leave for the summer. Well, and when everyone else is on vacation, you should be working and finding value. And when you're in the market and you find value and you get to sit back and and enjoy the bull market while everybody's chasing, it's the best feeling in the world. Now is the time when you want to prepare. It can be boring at times, but that's all right. So somebody said, please ignore if I have. Please ignore if I have what? I think maybe you might have asked a question, but it didn't come through. Daltone. I don't even know where that question came from. Trade decision line. Thanks for the insights. Appreciate it. Yeah, you're welcome, bro. But yeah, I don't know if you're still there, Daltone. I didn't see a question or anything, unless you asked it further up and I just missed it. Let me go back up and look. Yeah, I don't see anything. So if you want to try to retype your question, I'll hang out for another minute and see if I can answer it for you if I haven't already. But yeah, there's not too much else. I am curious what visible range looks like as we kind of scroll out to something like a weekly here. Forgot where there was some yeah, we are fairly close to this gap in the node, losing the bottom side here. We can go and pull in the prior structure and let that update here. Hold on. So yeah, we've got essentially smack dab on this peak right here for volume that was created with this structure, and the highs over here are like right on it. So if we lose it, it's basically 50K as the bottom side. Before you get to the next peak is 48K, which of course this is what you should see when you're looking at swings and trends, is the high volume pivot point, right? So 48 to 50, 58 to 60, you're seeing the peaks in that volume from the visible range. And of course, 48 to 40 essentially smack on it right there. And then right here at 58. So maybe I could actually point at it correctly. At 58 right there, 57, 58 or so. You tried to paste your question. Maybe it's not coming. Yeah, I can't see anything pasted in a chat, brother. You have to type it out if you have a question. And then 40, right around 47, 48. So if we do fall through 58, mid 50s, 52 and a half is where there's a big old gap in volume there. Yeah, no worries, bro. No worries. You can always, if you have a question that you can't post here, you can always put it in the comments and I'll get back to it when I'm done streaming and try to answer your question. But I appreciate everybody for liking, sharing this out there, and like and share it out there if you haven't already, for people who would like to come back and watch this. No guests this week. I was a little late to even start asking people if they wanted to come on. And so it's just me talking to you, having a little bit of fun. And next week, I'll probably have some guests. We'll see. I'm also trying to set up like a time that works for Mr. Spread, because I have yet to host him on a live stream, and he's in a very different time zone, but we're going to work something out, see if we can't get on a stream here together and talk to you all. Might end up having to just do a recording with him as well, because it's like 3 in the morning or something when I start this stream for him. I would love to have him on. He has a very different methodology for looking at markets than I do. And that's what I like. People who have different methodologies on how they break down markets, but end up finding a lot of confluence with what I'm doing and how I evaluate markets and direction. And I know that many of you have seen Ash. By the way, you should be following Ash. You should be following NatNat and Bits of Wealth and all the crew that you see typically over at Wolf Bitcoin. Shout out to Cade and ATC, of course. What are my thoughts on if Fort Knox is audited? If they really were audited and they didn't find anything, you'd never know. If they were audited and they did find stuff, then you would know. So if they didn't find anything, you wouldn't know. They did find stuff, then you would. So I don't think there's anything that happened. Or the gold's gone. It's all gone, man. But yeah, I hope you all have a wonderful weekend. Don't fall for the FUD. Don't fall for the sky is falling. Have a plan for accumulating your favorite assets, especially Bitcoin. Have a plan for how you're going to scale in, and don't blow your whole load right here at this area. If you are going to scale in, you will have time to position, and don't fall for the clickbait crap that's being put out there. Look, there's always going to be a whipping boy every cycle, where the heroes, what is the quote? Somebody out there knows that. I've said it a few times. Um, you either die a hero or live long enough to see yourself become the villain or something. Like that is always the case. And then when times are good again, everyone forgets all about it. I mean, look, when we were in the bull market, people were like, look at SPF had like the best picks of all of them. It was great. The portfolios did great. And he should let him go and he should come back and start launching coins again. It's like, whatever. And look, I'm not comparing any of what's going on with some of the narrative out there right now to SBF because it's nothing like that, in my personal opinion. Although people feel very strongly about a particular individual in his company. Look, don't fall for the BS. Even if things had to be distributed, we'd probably be in a bull market by then, or turning around into a bull market by the time any wheels moved. And also, there's no claim to the underlying Bitcoin. The wheels of the law and court systems move very, very slowly. And if anything, what I would advise them to do is just dump out like 2,500 Bitcoin. Just dump it on the market, grab some cash, watch everybody go crazy. And when Bitcoin bottoms out, you know, you wait it out, you be the hero again. All right. Have a great weekend. And more importantly, have a good night. Have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. With all of that being said, Landy out. Take care. I'll see you on Monday.